Assalamu alaikum everyone, welcome back to another video. I hope you're having a great day. In today's video we are doing a portfolio update for the month of April. We haven't done that for a while because obviously Eid holidays. I haven't had the opportunity to obviously do put together something for us for the in terms of portfolio update. But before we do that, I would like you to give the video a like, because it really helps the channel. Okay, it's amazing how much actually just that giving a like the videos, to be honest, helps the whole channel. And the more we give a like, the more people will see, inshallah, in the future. Okay, right, so what are we going to talk about today? We're going to talk about all the buys, all the sales, where my portfolio is at right now. Okay, and dividends received. So we're going to talk about a little bit of dividends. Okay, but before we do all of that, I just want to kind of give you a real quick reminder. Okay, so last week, okay, let's go to last week. It's been hectic. Okay, it's just right now the market is scary and there's so much going on. There's so many moving parts. I don't even know where to start. Okay, whether it's inflation, whether it's the interest rates going up, and speculation the interest rate will go up again in July, so and so. Even though the Fed is denying in the US, I mean, again, inflation in the UK hitting, I think, was it 8%, whatever it is, 9%, 7% in the, listen, jobs, and there's so many things going on. Okay, so despite all that noise, the market is doing all right. But the issue is actually some mornings the market will open like, I don't know, all green, and then by the end of that day is the Dow Jones is down like 1,000 points. So forget the noise, focus on your strategy. One of the things I found, right, I was looking at basically, I'm doing a research for another video that I was thinking to put together. Okay, and basically we're looking at the markets, so the average investors and how they perform on some of the things that basically stops us from actually being great investors. And here are 6 reasons why. Okay, I'm not going to read this, so I'll share the article with you. I just found it on, to be honest, just a Google search. I don't know how great this company is or who created this website, but do yourselves kind of investors. One of the things that stops us is from the basically psychology side of things, and that is we buy stocks when they're really basically high, and then we sell it when they're really low, because we get scared. Okay, you're always worried about basically the markets basically losing momentum and completely declining, and everything is just like panic, and then you read the news and everybody's basically panicking, and then you start selling all your investments. Okay, and that happens a lot. Okay, so all the bad news that's happening in the market, and the interest rates are going up because inflation is going up, they have to stop inflation going to whatever. Just to stop and think about what is your strategy. And that's one of the things they talk about. So it's all or nothing kind of for people. It's a lack of a strategy. Okay, what is your strategy? Have you actually got one? If you haven't, what are you doing? Just sit down and write a strategy. What is your plan? Are you a long-term investor? Are you going to buy those dips? Are you going to buy when the market is down, I don't know, last couple of days with 4%, 5%? Okay, are you buying? Okay, do you have the money? Have you done your research on these companies? Have you got your watch list? Are you ready to get them? Okay, the lack of process, lack of thinking, lack of discipline. So I'll share this with you guys. Okay, it's long. It's not that long, it's just a quick article, but I'll share that with you. And the other thing I really found interesting is, so this is 20-year annualized return by asset class. Okay, when you look at this and you look at the average investor, okay, look at the average investor, 2.9% return. And that's just disheartening in a way, because this is where we're at now. Because you're picking stocks, obviously, your plan is hopefully beat the market. Okay, the S&P 500, because that's the way how we measure the market, isn't it? Okay, but the average investor is basically getting 2.9. Why? Because we sell it, we buying it higher, we selling it low. So if you hold it in the long term, you could potentially get minimum of 7.5. Okay, and that's the reality. So you have to think about this. Okay, so just don't panic, don't sell your stocks in that situation. Right. Now what we're going to do is, so if the markets can keep going down or whatever, just think about your strategy. So today, one of the things I want to also talk about is the property side of things as well. Okay, alhamdulillah, we received our first rental income from the property that basically we bought recently, so I'll share that with you as well. Right, so let's start with this. This is my portfolio, so this dividend income dashboard here. Okay, currently the overall portfolio, so my entire portfolio is about £50,700. Okay, in dollars, it's about $62,500. Dividend received so far, £963. Okay, in pounds that is, and basically expecting dividends for 2022. Hopefully, it will be just above 1,000, whatever. Okay, so just this year. So what does that work out? So annually, okay, I'll be getting about 1,000 right now as we speak, and I'm adding to the portfolio. I'm getting paid more. The money that I'm getting is reinvested into the portfolio as well. Don't forget that. So it's £1,052 right now, or in dollars, 1,189. And this takes into consideration the fact that I have to pay 15% for the US stocks. So when I get paid from J&J, for example, I have to pay 15% tax, for example, right? But I don't get tax in terms of, because it's my using my ISA account. So the UK, I don't get taxed, but the US takes about 15%, right? So that works out monthly, right? If you divide that by 12, you get about £87 a month. That could genuinely like pay for some of my bills, right? But I'm not taking anything out, but I'm just saying I could use that money if I wanted to, but I'm reinvesting it. Okay, well, that works out about $99 a month, which is really nice to see. When you put it that way, you realize how powerful dividends are, genuinely. Because in my portfolio was like, say, about 200, 300. Inshallah, it will be one day, okay, if I carry on the way I am. Okay, this could be about 10,000. I could be getting, I don't know, about £1,000 a month from this basically portfolio. And that to me is really good, and that's a passive money. I don't have to do anything. I got paid just a couple of days ago by Lowe's, paid me about £5 something, right? And I looked at it and I thought, that's really small, but that can actually, I can go to Starbucks or I don't know, Costco, whatever, right? Costa, whatever, and just buy a coffee with that, or maybe just reinvest it, which is what I did at the end, and I'll show you in a bit. Okay, so that is just what the overall dividends portfolio, and genuinely my plan is, inshallah, to grow these dividends, okay, to grow this portfolio. Trading 212, I'm going to grow that portfolio in Trading 212, which is basically this platform that I'm using, at least to 200,000. Okay, so we'll see what happens. Once it reaches 100,000, okay, then I might actually open another ISA account with another company, just to kind of diversify the portfolio generally. Okay, right, so what's happening here? We've got top 10 stocks here, and then top 10 by income. So J&J is my biggest holding right now. It used to be Microsoft, because Microsoft is down quite a bit. Okay, they are now about 8%, 8.5% each. Then I've got 3M, then Air Products and Chemicals, Home Depot, Adobe. Adobe is being up because I've been buying a lot now. Is actually a part of and about 5% of my overall portfolio. Okay, which basically means whenever, because it's quite volatile stock and it goes down and up like 3-4% every single day. Right now, especially, hopefully once the market is stabilized, it will be good. Okay, then I've got Broadcom, which is again another tech company. Okay, and that's a bit volatile. Then I've got Union Pacific, Procter & Gamble, and Cummins. All of them about, just the lowest is almost about 5%. So the top 10, okay, these are some of my biggest holdings and actually one of my favorite companies. And all of them pay dividend apart from Adobe there. Then you've got 3M, it pays me the highest, £103, J&J 84, almost £85, Air Products and Chemicals 82 Unilever £65, Broadcom £56, and Amgen 53, Cummins is about 53 as well, and then Home Depot 52, Merck is 50, and then Rio Tinto is actually 46. Although I own, I think, about 8 shares, because they pay, I can't remember, I think it was about $10 or £10 or something like that. Okay, so that is the top 10. So that's where majority of my income comes from, and that top 10. And when you look at the diversification in terms of portfolio, you can see right now, where did it go? Wait, just something has happened to my portfolio. Okay, I'm gonna have to update this because my biggest holdings is not healthcare. Okay, my biggest holdings should have been technology, but something happened. So let me quickly fix that. There you go. I think this was hidden somehow. But yeah, so 32% of my portfolio is right now technology. And this is the reason why I didn't want to basically add any more money to this, because it's about £16,000 of my portfolio is actually in the technology. And this includes growth as well. So this is entire tech, whether it's a dividends or whatever. Okay. Then when you look at the healthcare, as you can see, is the next big one. So, and that's almost to 20%, 9% for consumer, or 10% consumer discretionary, 19%, 19.4%, so close to healthcare. Is industrials. I actually do like in the industrials. Materials is just less than 9%, consumer defensive is 9%, and so on. Now, my plan is, inshallah, in the long run to actually increase this. Okay, I only have 4,800 in consumer defensive, okay, or the consumer staples. I want to increase it to at least 10% of my overall portfolio, if not more. Okay, sorry, £10,000 of my portfolio. So I want to double that, but right now they're quite expensive. Materials, I want to also increase that. Healthcare, I'm going to also increase it, and consumer discretionary, probably about 7,000-8,000. We'll see how it goes. Okay, so that is basically the portfolio breakdown in basically overall total. The next thing I want to show you is dividends. Okay, so in the month, so generally this is where we are now. So I started investing in this portfolio May 2020. So the first payment I got was in May 2020. Okay, that year I've been paid $163 per total, and then 2021 £558, and this year so far £241. And as you can see, that came from lows a couple of days ago, and I actually basically put that money to work and buying SPGI or S&P Global, £5.43 worth of shares. So that is overall the portfolio and where it's heading. And when you see this, what I want to get to, okay, is, as you can see, the orange, this color here, whatever that color is, okay, orange, 2022. I want the 2022 to be way better, okay, hopefully, than the reds and the blues in basically 2020 and 2021. So inshallah, that's the basically plan. And then next couple of years, just keep compounding and keep investing. Every penny that I received here, so I got so far, I've been paid almost £1,000. That £1,000 is actually reinvested in the portfolio. Any sales that I make in this portfolio and any profit that I take. So the other day when we sold MasterCard, I made about £200. That £200 was basically reinvested straight away into the portfolio. I've never taken a penny out of this portfolio ever, and that is something that I'm going to continue doing. Okay, so this is where we are so far. So in terms, so one more thing I'm going to show you. Okay, and this is the property. So the rental income from that property, for those who don't know, just watch the video where I talked about, I gave you a breakdown of everything, basically how much I spent on that, buying that one bedroom or studio flat in Leicester, okay, in the UK. And right now that basically cost us about £70,000. Right now we got paid in April, and that was £510. That's how much we got paid. I have a company managing the property, so when things happen, they're dealing with basically the tenant. They take care of everything. Something goes wrong, blah blah blah, all that stuff. So the management plus the VAT was £61.20, and alhamdulillah, this month we didn't have any repairs or maintenance that can normally happen here and there. Okay, so we had nothing so far, and total I've received £448.80. So that's basically how much I got this month in my account from that investment. Right, total, okay, basically rental income as well as dividends, I've received 500, okay, and actually, yeah, 509, almost to £510. What I want to do in the long run is continue investing, continue buying properties if I can, continue buying great dividend stocks, okay, and hold them forever and get paid, and that's it. And if I can increase this, okay, every single month from 500 to at least 2,000, whatever, okay, then I can retire easily if I needed to. Okay, if I obviously, inshallah, once I get to a position where I've saved enough, I've invested enough, obviously then I can start thinking about retirement. My children is still young, and alhamdulillah, I'm still young. I've got a nice job, I like it, whatever. But I'm gonna build. This is my stage of just building wealth, and that's what I want to do. The reason I'm doing this, wallahi al-azim, is not to show off. I hope that you understand that. It's not to show off, but it's to show you what is basically what you can do. Start, it doesn't matter. Even if you got £60 right now in your bank and you're just sitting there, basically inflation would eat you away, so you might as well invest in something that you believe in. Okay, whatever the case that might be. So I'm doing this, and I will continue to do this every single month. I will share it with you, whether basically we make a loss or make a profit. I will continue to do this. The reason I started this portfolio here and this YouTube channel, this thing, okay, it's not easy. Trust me. Basically, it takes a lot of time to do this research and put all of this together. So I would absolutely appreciate if you can actually give it a like. The reason I started was just to make sure that, you know, I hopefully inspire someone else out there that is basically in a similar position as I am. And if you can benefit something from this, alhamdulillah, that's the most important thing for me, okay? So inshallah, just make dua for me and for my family, and just give these videos a like, and that's all I ask for. So that is just everything we've done so far. Now quickly, I'm going to spend about a couple of minutes on the buys and sales, and then we'll stop the video, right? So this month, in fact, let's start with the sales. So WM's West Management, I only had 163. It was too expensive. I couldn't add to it. So I took that money and bought something else. I can't remember what I bought with that. iShares, the ETF, the emerging markets ETF, I looked at it again, and genuinely 21%, almost 22% of that is Taiwan Semiconductor. Then is Samsung, like another, basically almost 30% of that. The two main companies, basically the top two, are almost at 30% of the entire thing. If anything happens to these companies, this is gonna tank. So for that reason, I sold it, and I put that money straight back into the other two ETFs, and I'll show you that in a second. I've already done a video where I shared with you the fact that we sold the MasterCard, okay, and that we took that money and put it into another two companies. So I will show you where that money went. So Lowe's, basically we bought almost 1.5 shares. That will give us £3 in dividends. Home Depot, I added 2 more shares again, almost £10. Colgate, again, I bought 13 shares of this company. Right now I own 13, I think, in total, and that's about £17. Then UPS is basically new additions. I almost got 7 shares there, £28. Stanley Black & Decker, I've added 2 more shares just to average down. That's going to give us about £4. Medtronics, I think I rounded up. I think I had about 12 point something shares, so I rounded up to 17 shares. So a little bit, but that still gives us 53 cents there, pence if you like. And then iShares, these two. So because I sell the emerging markets one, I actually put the money straight back into that same two companies. And what I'm going to do from now on, inshallah, is share the portfolio for that for the 2 ETFs, because I haven't shared that with you guys, so you know exactly what I'm invested in. Okay, and that adds again by just buying those two, £1.77, and then you've got 82p for that one. Rio Tinto, I bought 2 more shares. That adds about £21. That's crazy. And then you've seen the video where I actually bought these 2 companies in there. Right, so we spent 4,000. Right, so we actually sold 1,800. Okay, and then I added the rest, so that's £4,000 that we spent this month. And I'm really happy with that, because you know, adding about £2,000, over £2,000 every single month. Although my target was 1,000, because the markets are tanking. There's a lot of great companies like Home Depots and Lowe's that were really expensive, okay, for a long time. UPS is on my watch list for a long time, but it was actually overvalued. But now it's coming back down again. But all of that added actually, and again, £86.5 for basically of dividends, which will obviously get paid in the next few months, years, and then that will be reinvested in the portfolio and so on. So the ETFs, we still have it. We haven't sold anything. So I'm going to quickly show you here. So the 2 ETFs, and I will share this with you from now on, so at least you know, the 2 ETFs are still there. Okay, they are actually up 6% and 8%, both of them. And I actually like them, and I'm going to buy them. My main thing is actually when the markets are too expensive, I'm going to add money to these 2 portfolios a lot. When the markets actually basically down a lot, and we've got actually companies like 3M that are down quite a bit. I'll rather buy 3M than actually buying these ETFs. So again, just to quickly, what I'm going to do is, you can pause the video. So I'm going to scroll down a little bit so you can actually, I'm not going to go through every single company. I think a lot of you have seen it. So I'll basically, you can pause it and have a look at the holdings. One of the things I want to mention is, right, at some point in the last few weeks, right, this company 3M was down about almost to £400. Right now I'm only down 75 or 2%. So that is huge. Amgen was down quite a bit at some point, is back again. Same thing for air products and chemicals. I was down almost to 7-8%. Right now only 2.5%. So these things can happen very, very quickly. So you have to think about that, okay? Same thing for actually Cummins. Cummins, I think I was down about £250 not long ago. So yeah, when that's the overall portfolio, I haven't added anything new, any new companies other than I put the £5.31 pence that was actually PE that I got from the dividend, Lowe's dividend. I just bought that. So SPGN or S&P Global is a company that we've talked about recently in the last video, and I'm going to add to it as we go along from now on. So the rest of the companies are still the same. I haven't, so you can see UPS is in there. We've already talked about that. I haven't touched Union Pacific because I do feel it's still a bit overvalued. VF actually quite down, so I might be averaging it down in the next few weeks. Visa is still there, nothing else there. So you can you can pause the video and have a look at some of the holdings and how much I have. But overall, just to quickly show you, you can see J&J is my biggest holding, then Microsoft, then 3M, Air Products. I've already shared that with you, so you can see that. And yeah, I hope you enjoyed the transparency, and I hope you're gaining something out of these videos. And if you are watching it still, then I really, really appreciate that. So thank you so much for watching these videos. Thank you for basically commenting on the videos and letting me know what you think about the portfolio and all of that. Okay, for asking questions. It's not easy to invest right now, okay? So at the beginning of the last week, I had £49,000. I've added a little bit of money, but the rest of it was actually gains. At some point, okay, we had £51,842. And then straight away, boom, it went down. And right now we are back basically almost to 50,000. So this will happen, okay? But what do you need to think about is the long-term plan, okay? So since I started portfolio, it's going up. It's going up because, as you can see here, almost the 3,000 or above £3,000 is actually gains. And I've only invested 46,800. And that includes, okay, the money I've made. Just to be transparent, okay, I will show you right now, okay? I'll show you right now how much. So if we click, so just let's go to dividends, okay? So you can see I've invested, so basically I've realized gains of £4,900. That's basically selling stocks that I used to own and then taking that profit, reinvesting that profit. And I only deposited £41,500 in this portfolio. Rest of it came from this and this. My dividends are being paid £164 that went back straight in, as well as this £5,000. So all of that, so I've invested £4,500. Okay, and as you can see right now, the portfolio is almost £50,000. So these things will happen. You will have some companies that are not doing really well, but have your strategy. Think about your long-term plan. Don't panic. Don't sell. I hope you enjoy. Assalamu alaikum. Take care.